Consistency beats intensity in the market and in life. Hey traders, welcome back to Your Nifty Guy. My goal here is very simple to help you cut through the noise and trade with clarity. I simplify trading so that you can focus on what really matters price action and solid planning. We'll decode Nifty's today's move, set clear levels for tomorrow, and I'll share how I plan to approach the session. If that sounds helpful, hit like, subscribe if you haven't already, and share your thoughts below in the comments box. Let's get straight to the charts now. First, again, as usual, the video will be divided into two parts. First, we'll discuss what we had planned for today versus what actually happened in the markets and how did we play that out. Then, in the second half, we'll be discussing about the trading plan for tomorrow. Our clear trading plan today was to short Nifty below this particular level. And there was one particular trade that I was looking for, which was a bearish candle below this particular trend line, and then the high of that bearish candle gets taken out. Now, I trade this particular setup only on a 5 minutes time frame, but I will be giving an example of how to look or approach this particular setup on a 1 minute time frame. This is not exactly what I plan to trade. I did not take this particular trade today because although the first 5 minutes time frame, the first 5 minutes candle did give us a closing below the particular zone, and the high was also taken out, but this candle does not look bearish to me. As I told, the candle for which the high needs to be taken out needs to be a bearish candle, whereas this looks like a bullish candle wherein the prices were pushed down, but ultimately closed up near the high of the candle. And even though the closing was negative, even though the opening equals to open was as equal to as high of this particular candle, this is still not a bearish candle for me. However, if you look at the same particular price action of today on a 1 minute time frame, this is just for reference. Please do not trade this particular setup on a 1 minute time frame. I'm just giving you a reference about what can be. Say, for example, this is not 1 minute, but a 5 minutes time frame. We get this bearish closing. This is a good enough bearish Marubozu candle. We get two more further follow throughs up to this candle. Then we get a pullback. We get again a small push on the downside. And then once the high of this candle gets taken out, this is the trade that I was talking about. Right? Although this thing and the scenario that I'm explaining that is on a 1 minute time frame, but ignore the time frame for now. Just look at the candlestick formation and try to understand this is what exactly I was talking about. The setup which is there, we need a trending day on the previous day, and then if we get a bearish candle with a closing below the previous day's low, and then the high of that candle gets taken out, we can get a good scalping opportunity. Now, this why I say we can get a good scalping opportunity because this can only be a scalp trade, right? The reason being you are trading opposite to the trend. The trend is bearish, but you are planning a bullish trade. So it has to be a scalp. It has to be done in lower quantities. It has to be done quickly. The SL should have been right around here. And you can see, you can simply trail it as per any system that you follow, be it EMA, be it as per the last candlestick low, whatever it is, you can simply trail it. So I hope the price action formation that I am looking at is clearly uh, is clear to all of you. Although I did not trade this because obviously on a 5 minutes time frame, the candle does not look bearish to me at all. And that was the reason I decided to give this trade a pass. Now, today I was not looking at actively trading because I've not been keeping well since Friday. I have a pretty ugly stomach infection. And when things like that happens, I try to take my day a bit slow. But however, because I did not even go to office and I was completely free, I was just watching the charts, and I decided if even if something happens as per my setup, I'll be trading very light today. And the only trade that I took today was a short below this particular low, and I'll explain the logic very shortly. So just be with me. Now, as I always have been speaking about trying to talk to the markets to find out what exactly is happening behind this particular candles, and I pay a lot of attention to market structure. Now, I will quickly be demonstrating how I look at market structure, uh, so that it's because I do not use this particular tool to draw market structure, but in case if somebody is new to understanding market structure and or has some difficulty in trying to understand the market structure, they can definitely be using this particular tool to try and understand what exactly is happening, right? So around here at the start of the day, the market structure was bullish. Uh, why bullish? a series of higher highs and higher lows were forming in the market. The low was in the first 5 minutes of the day. Then this was the high followed by this high. This low was followed by this particular higher low. Around here, if you see, the low which was created around here was almost breached, and then a lower high was created, right? So you can see the structure changing. But for the structure to be confirmed, what we need is another follow through of a lower low, which did not happen up until here. If you can see around here, the low which formed was higher compared to this particular low. Then the high was in line of our market structure, which was a lower high. Again, this low was breached. It was a good signal. And around here, if we see, the high was never breached. Again, we got a lower high. So the market structure has been confirmed. And once we got I'll quickly now be removing this so to avoid confusion. And if you see, if you simply connect these two wicks around here, this is also a breakdown of this particular trend line, followed by a pullback. As soon as the low was taken out, I entered into a short position around here. The SL was right above this particular thing. So this is kind of a confluence trading, right? So you are confluencing the market structure along with trendline breakdowns, complete with the entire setup of using or trading breakouts or breakdowns only with valid pullbacks. So the pullback was valid. It can also be said as a retest of the trend line. And as you can see, we got a good trade, a very, very good trade on the downside. I exited on this particular candle. Now, the reason is very, very simple. I follow a candlestick rule of trailing, wherein if I get good profits immediately after entering the trades, which you can see here, market moved with momentum. Around here, I thought if this candle would have given me a follow through, I would have exited. But then again, the move or the push came on the downside. And this is the first candle which followed the three rules, which is the because I was in a short trade, I needed a candle which has a low higher than previous candle's low, high higher than previous candle's high, and closing above the previous candle's high. And that was the reason. This is where I got out of the trade. It was a simple, good planned trade as per me. And I hope you guys are able to understand how I follow the market structure. Now, for the experience which I have or the time that I have spent on reading charts or trading Nifty, I do not need to use this tool to draw market structure. I simply follow each swing, wherein I note it down mentally whether what is the structure going? Is it sideways or we are in an upward structure, we are in a lower structure, and based on that particular move, I plan my trades. So around here, this is when the structure had changed. When I planned for a short entry, I quickly drew this particular trend line. As soon as it broke down, was actually a very, very perfect picture, perfect trade, like they say, textbook like trade. Although price action is seldom this clear, but this is something which I traded in the markets today. And now, if we are to speak and plan about tomorrow. Again, I'll start with the daily time frame. I'll be deleting this. On a daily time frame, as you can see, we are looking extremely, extremely bearish. We have also broken down of this particular zone. I think it's time to extend this gap area. I'll quickly. Market might be coming down to fill this gap. Again, we'll be observant of price action around this gap, and we'll plan our trades whenever the market reaches around these levels. But for now, again, I think I don't think, but these levels will be changing for us on a daily time frame. Let's connect this, and then the 0.5 to 0.618 zone, which I use religiously, is around here. Sorry. Now we'll again jump down to some lower time frames for our analysis. The structure is quite bearish. Again, for tomorrow, this low is important. Again, the trade that I explained at the start of the video about a trap setup, we need a bearish candle, which gives us a closing below today's low. And in case whenever the high of that candle gets taken out, we will plan a trade on the long side. If we are planning a trade on the long side, I believe this falls 50% should be your first target. Not exactly the entire move, but around here or around, because this is just a scalp. So if we are taking this particular trade, this area, 24,770 to 24,800 should be your first target, and any negative price action around this, you should look at booking your positions. Now, again, as I said, this particular trade has to be in line because today was a trending move on the downside. After this particular move on the upside, we can plan this trade. People who would have missed this trade would be entering the trade around here, and once their SLs gets hit, you can get a scalp on the long side. So keep in mind the certain conditions have to be fulfilled, and in case if there is any doubt in your mind, please it will be a request to watch this particular video from the very start, because that is exactly where I have actually zoomed down to the 1 minute time frame where the trade setup that I look at had actually formed, but on a 5 minutes time frame on which I trade did not occur. So that is the reason why I did not take this trade. But in case you want to clarify how things will work, go and watch the start of this video. You will be again be ready and understand this particular setup. Uh, and then again, below this particular low, we are short with a pullback around this region again. Any negative price action would be a sign for me to go short. Let me look in case if I can plan. I believe planning long trade should be restricted to these levels. Will again also be almost back near the trend line which is there. Daily time frame. Let me see if there is any trend line coming in from below. Nope, we are on in a negative sentiment as of now. Yes, so I think this should be the simple trading plan for us, right? Any trades on the long side have to be with short quantity, lower quantities, and you need to trail tight. You need to have a very strict stop loss as well. So I hope the plan of action is very, very simple. So market will reward your planning. Market will not reward any random trades or any random setups that you use. Please make sure to prepare in advance for all the possible scenarios in the market. The best scenario uh, in my opinion, would be a flattish opening, a trap first, and then we get a selling around here. So you'll be able to take in two good trades. One would be a scalp on the long side, and then around these levels, or maybe below these also, because not necessarily the market will always trace to these levels. But after the failed setup, again, pay close attention to the market structure, like I explained at the start of the video. That is going to help you be on the right side of the market. The ultimate, if you winning or losing in the long run, will definitely be a lot dependent on your position sizing as well as your risk management. So also sincere request to please work on that. And yeah, that's it from my side for today. I will see you guys again tomorrow post the market. Stay safe and trade with your plan. Plan the trades and then trade your plan. So this is your Nifty Guy signing off for today. I'll see you guys again tomorrow. Post the market. Cheers and thanks for tuning in.